Hey everyone, welcome back for another deep dive. We're always keeping an eye on what's making headlines, and one thing that's been popping up lately is all the talk about the Indian rupee, or for short.
Yeah, seems like everyone's talking about it, right? And today we're going to try to really break down what's going on with the whole up and down thing. Why does the rupee's value change so much? It's like a roller coaster sometimes.
Exactly. So our jumping off point for this deep dive is this pasted text we've got. It gives a pretty good initial look at what's driving these changes. And, our mission here, as always, is to make sense of this stuff without getting too lost in the technical jargon.
Right, cut through the noise.
Okay, so picture this. You're scrolling through the news, right? Or maybe checking out flights for that trip you've been wanting to take, and you see it, the Indian rupee, kind of bobbing up and down against the US dollar.
Yeah, it's like a little dance they do, sometimes a slow sway, other times a big jump.
And it makes you think, doesn't it? Like, what's actually going on there? What makes the rupee gain strength or lose a little bit of its footing?
Well, that everyday mystery is exactly what we're going to try to crack today in this deep dive. We've been looking into all the stuff that makes the rupee's value, go up and down against the dollar. And the goal here is to make it clear without drowning you in like hardcore economics jargon.
Exactly. This is about understanding that rupee roller coaster, as you so aptly put it. So you've seen the rate change, maybe even felt it in your pocket, and you've probably thought, what's the deal? Well, today we're going to unpack what makes the rupee stronger or weaker compared to the dollar.
We need to start with the basics, though, right? Like, what do we actually mean when we say a strong or a weak rupee, compared to the US dollar? That's got to be the first step before we jump into the why.
For sure, let's keep it super simple. A strong rupee basically means you need fewer rupees to buy one US dollar. Think of it like needing fewer coins to get that snack from the vending machine.
I like that.
And then, of course, a weak rupee, that means you got to shell out more rupees to get that same single dollar.
Perfect analogy. And this whole up and down thing, it's not just some abstract number on a screen. It actually has real life effects, for you and me. Imagine you want to buy, I don't know, some cool gadget from the US. If the rupee is strong, you're essentially getting more bang for your buck, right? Those American goods become relatively cheaper.
Oh, so that new phone I've been eyeing, it's going to be a little easier on the wallet if the rupee's doing well? But what if it's the opposite? What if the rupees kind of leak?
Then most same US goods, they're going to end up costing you more in rupees. But here's the twist. There's another side to this whole strong weak thing. If you're an Indian business, let's say, exporting stuff to the US, a weaker rupee can actually work in your favor. When they pay you in dollars, you're getting more rupees back when you convert that money.
That's actually really interesting because I think a lot of us, we just assume a weak rupee is like automatically bad news. But you're saying for exporters, it can be a good thing.
Exactly. It makes Indian products and services more attractive to buyers who are using, stronger currencies like the dollar. So while you might have to pay a bit more for those imported chocolates, Indian companies, they might see a boost in their sales because of their stuff's become relatively cheaper.
Okay, that's a really important point, right? It's not always black and white. So now that we kind of get what a strong or weak rupee means, let's get into the nitty-gritty. What are some of the things that can actually make the rupee weaken? Like, what are the heavy hitters?
Well, one of the biggest factors, especially for a country like India that imports a lot of its energy, is the price of oil. India needs a ton of crude oil to keep things running. When the global price of oil shoots up, India has to spend more US dollars to get the same amount.
And that need for more dollars, that has a domino effect, right? Like, if everyone suddenly wants apples, the price of apples goes up compared to oranges.
You got it. To pay for that more expensive oil, Indian companies need to convert more rupees into dollars. This bumps up the demand for dollars in the market, and compared to the supply of rupees, the rupee's value takes a hit. You can actually see this play out when you go to fill up your car. Those petrol and diesel prices, when they spike, that's a direct result of this whole oil price game.
Oh yeah, we definitely feel that in our wallets. So high oil prices usually means a weaker rupee. Got it. What else can push the rupee down?
Another big factor is what's happening with interest rates over in the U.S. So when the U.S. central bank, Federal Reserve, hikes up interest rates, it becomes more tempting for investors all over the world to put their money into, well, dollar-based investments. Higher interest rates often mean like potentially safer, better returns compared to what they could get elsewhere.
So if investors are chasing those potentially juicy returns in the U.S., what happens to the money they might have invested here in India?
They might just pack up and move their investments from India to the US, to grab those higher interest rates. This is what's called capital outflow money, basically leaving the country. And of course, this usually means converting rupees back into dollars. And like we talked about with the oil, that increased demand for dollars, coupled with a shrinking dollar supplied in India, puts pressure on the rupee, making it weaker.
It's like a money magnet, pulling everything towards the best deals, right?
That's a great way to put it.
Are there any other, like, common reasons the rupee might struggle a bit?
Oh, absolutely. There are actually a bunch of other things that all play a role. For example, if a country consistently buys more from other countries than it sells to them, that's what we call a trade deficit. That can put a strain on the rupee. And then there's inflation. If prices are rising much faster in India than in other major economies, the rupee's purchasing power within India goes down, which can also weaken it on the global stage.
So a bunch of internal factors too.
Yeah, and we can't forget about global events, stuff like political instability, whether it's here or somewhere else, or those big world-shaking events, like wars or economic downturns. Those can make investors nervous. They might pull their money out of emerging markets like India, and again, that increases demand for those safer currencies like the dollar. All that uncertainty, it can really rattle investor confidence, and when confidence takes a hit, the rupee often feels it.
Wow, so it really is this like intricate web, right? From oil prices to global interest rates, even stuff happening on the other side of the world, it all connects to affect that little exchange rate we see every day and don't even think twice about.
What's fascinating is how all these seemingly unrelated things, the price of oil going up, a change in US interest rates, or even, some political development in a completely different country, can all have a ripple effect on the value of the rupee right here.
It really feels you how connected the global economy is, doesn't it? Now, the information we were looking at, it mostly focused on what makes the rupee weaker, which is a bummer.
Yeah, that's true.
But even with that, I think we have a much clearer idea of some of the main forces at play, right?
Oh, absolutely. We've seen how much India depends on imported oil and how that makes it vulnerable to changes in global oil prices. And we talked about how interest rates, how those differences between like the US and India can influence where investors decide to park their money, which in turn affects the rupee.
So bringing it all home, it's clear that the value of the Indian rupee against the US dollar is not just some random number. It's a direct result of this constant push and pull of all these economic forces, both within India and globally. And whether the rupee is strengthening or weakening, it has different consequences for different parts of the Indian economy and for us as individuals.
Couldn't have said it better myself. It's not a simple case of strong equals good, weak equals bad. It's much more nuanced than that, with different impacts depending on who you are and what you're doing.
So thinking about how much we rely on those oil imports and how influential global interest rates are, what do you think is one of the biggest ongoing challenges for, keeping the rupee's value relatively stable? What do you think? It's a lot to consider, especially after all the stuff we've talked about today.
That's the million-dollar question, isn't it? This whole interplay between what's happening globally and how it affects the domestic economy. It's an ongoing story. We really encourage you to keep an eye on those global trends and, think about how they might shape the value of the rupee in the years to come.
On that note, we've got to wrap
This
up.
time flies, doesn't
It
it?
really does, but thanks for diving in with us today.
Everyone, keep that curiosity alive.
Bye.
Bye.